Okay, good afternoon, everybody. Today's August 6th, 2021. This is the weekly take on the market. It's Friday, just after 1 o'clock Pacific time. The market has just closed. I will be your host. My name is Scott St. Clair. I'm Senior Product Coach here at MarketSmith. Here is the disclaimer. Please take a moment to look at that. Any stocks that come up or are mentioned are not buy or sell recommendations. I want to teach you to fish on your own. Here are the market gauges. The market's green. It's in an uptrend. Hard to argue with that. We do have a few distribution days. I think it's 6 on the S&P, 4 on the Nasdaq, something of that nature. But we're within 1 or 2 days of all-time highs on all the indexes. So it's uptrend. I don't know when it's going to end. No one knows. That's for sure. The leadership, I don't know. I guess you could argue it's green. It's hit or miss. We are in the teeth of earnings season, so there are some landmines out there. And I haven't noticed a lot of gap ups. I guess Snap would probably be the best one that I could think of off the top of my head. I'm sure there are others, but it hasn't been, there's been a few bad ones, but mostly kind of a non-event. And then the portfolio, I just haven't made a lot of progress in the last handful of weeks. I haven't been that much invested either. I was on vacation and in almost all cash. I was on vacation. So for me anyways, it's just neutral, not good, not bad. We are approaching seasonality where the market tends to get into its toughest period. This was a snapshot from the book Alpha Trader. And it's going back to 1990. I thought this was a pretty cool chart to overlay where you just take every month and overlay it into a single chart. And seasonality since 1990 anyways would peak in mid-September and trough in early October. And that's why actually most people think of October as being the worst month. I think it's actually September. Most of the bad stuff happens in mid to late September, and then the market usually will find a floor in October, at least some of the historical bear markets. Anyways, if you believe in seasonality, I think it makes sense. I tend to do much better in the early parts of the year and then in the later part of the year. I don't know, maybe if I just get tired because I'm pressing as the year goes along. I know that when they study the in-house portfolio managers at William O'Neill Company, their last quarter is their best quarter by far. Now they have an outlier. I think the quarter ended 1999. They just blew the doors off. But even without that outlier, if they were to remove it, their last quarter is still their best quarter as a firm. So there must be something to it. So keep that in mind. It's just one, just because it happens historically doesn't mean it has to happen going forward, but you're aware of the seasonality of the headwinds. These are the numbers for the Nasdaq 100 since 2009. I was a little surprised. I didn't realize it's 2018 was basically flat, but nothing but positive returns. And so far this year, it's had a great year. I don't know if it can continue like that, or I would guess it can't, but I don't know. But it's amazing. I don't know if you could go back and look and find an index that's had a string of positive this many in a row, going all the way back since indexes were first created. I'd be curious about that. But the Nasdaq 100 has been where all the best companies are. So you've had the best performance. And if you showed me this chart in 2018, I'd have said it's tired. And then in 2019 and 2020 had incredible years. So it looks a little tired to me, this trend, and it will end eventually, but you don't have to predict when it will end. If you try to predict it and thought it would end in 2014 or 15 or 17, you can leave a lot on the table. All right, so let's open up MarketSmith and let's get into the markets. Here is a chart of the Nasdaq. The volume is not up to date because we just closed, and this might be just a tad off, but I didn't see a whole lot of volatility near the end. So, you know, Nasdaq's fine. It is underperforming. Let's beat that dead horse. Here's the RS line, underperforming that peak and underperforming slightly that peak. And, you know, here you are 600-700 points above that number. So that's a bit concerning, but prices haven't gone down. And I think in the end, when prices go down and then they stay down, then you probably should get concerned. What is can stay down? Is that a week, a month? I don't know. Go back and study previous tops. You tend to get some type of break and then a rally back that doesn't make a high, right? And that would be the key. So if something happened in the market, you'd get a break and then some type of rally, but that rally would not make a new high. And then, you know, another leg down. And we haven't had anything like that. A lot of times you can't even undercut the low, right? So you rally, you don't make a new high, you start to go down, but you never make a new low, and then you make another high. You break, you rally, you start to go down. These would be areas where I'd be concerned with the market, like right in there and right in there. I would be lightly invested at best, but then you make another high and then you get a break and you rally, but you never get another leg down, you make another high. So you need some type of lower low. And you know, like even on this daily chart, you can't even find a lower low anywhere. So that would be something to look for. Let's look at the S&P. I'm sure it looks fairly similar, right? So a low, no lower low, a low, no lower low, a low, a low, a low. You get the idea. Just can't make another lower low. So we're in an uptrend. That doesn't mean you have to be fully invested. I'm not. I don't see a lot to do. And I'm okay with that. If the market goes up 10% from here and I make 5, that's fine. I don't have to worry about it. I don't have anybody to compete with. I don't have a mandate. I'm not a mutual fund. So, you know, that's one of the huge advantages to running your own money, is that flexibility. Let's see here. What else should we look at? Let's look at Chinese tech stocks. Wow, they just got torched, down 50%, I think. Yeah, 53% in a number of weeks. What's that, about 18 weeks or something like that? So that's been an area of just flat out bear market. And, you know, we've probably seen the stories there. IWM, not doing a whole lot, just going sideways, underperforming, but not acting bearish. Emerging markets, not just basically cannot compete with the S&P and haven't for a long time. Look at emerging markets. Here's the top in 07. And here we are right here, and it hasn't even made a higher high. So all the money and all the action is in the US until it isn't. Let's go back to the slides. We have a couple of new reports in MarketSmith that are pretty cool. I haven't built them into my routine just yet. I'm going to try to figure out how to use them this weekend, but I'm going to go over those instead of the industry groups. If you are on IBD Live, Justin every Monday does a really good job of going through the industry group analysis. He shows you the deltas on which groups are moving up the food chain, which are moving down, what are some of the leaders in those groups. And so that's really cool. Someday I hope MarketSmith, if I have any say in it, will have those features where you'll be able to see the delta, like which groups are moving, which ones aren't, or I'm sorry, moving up, and which ones are moving down, and be able to you know, highlight the group that goes from 70 to 35. Much more important than the group that was 8 last week that's currently 7. Or that was 3 that's now 6, right? By the time it's 3, 2, 1, if you're in a bull market, you've probably missed the leaders, right? If you're in a sideways bear market, though, then that's fine. Those are great groups to look at, but in context of the market. So we're going to go through these reports, then we'll do 3 stocks, And then I will do the quote of the week. So let's go ahead and open the stock ideas button. Let's just open up any of these reports. It doesn't matter, breaking out today. I'm going to pull this list to the top. And these new reports, they are premium. So if you're not a premium subscriber, you're not going to have access to these reports. But most people, not everybody, but most people are on premium subscription. And it's going to be in this folder called stocks. So if you have them all closed up like this, open up reports. The very first report is the Growth 250. The one below that will be the stocks subfolder. Let's go ahead and left click to open it. You'll see another subfolder called technical. Go ahead and left click to open that. And the new ones are tight areas, bases forming, way cool, something people have been asking about, and RS line new high, like a cumulative list. So if you want the kind of the technical version, you click on this little drop down arrow, hit view details, and it tells you how this list was created. RS line, click on this, view details, all stocks with an RS line breaking to 52-week highs. Pretty simple. But let's go to bases forming. I'm going to left click it. So there are 1,281 stocks in our database that are currently in the middle of a base. It's a double bottom, it's a cup, it's a flat base, etc. And you can sort them. You can see what I've done is I've sorted them by the weekly base type. You could sort by composite rating if you wanted, or RS, or any of the things. I think what I'll probably do, like I said, I haven't used this yet, but I'm trying to figure out a way to do it, is sort by weekly base. The first one you'll see is the IPO base. There's a lot of IPO bases. There's been quite a number of IPOs this year. The next one is consolidation, flat base, and I don't know why. I guess if I did a secondary sort, I could get these to line up. But what I'm looking for next is stage one. So now these are all the stage one bases. So I could go through all the stage ones. And if I want, I could go through all the stage twos. This is a pretty big list, 1,281. I'm probably going to want to build a screen around it. So in the screener, you can create your own custom screen, new stock screen, bases forming list, and excuse my typo. But instead of the screening the MarketSmith database, I'm going to click this and I'm going to change it from reports to bases forming. Instead of taking the whole MarketSmith database and screening, I'm going to tell MarketSmith just look inside the bases forming list. Okay, I hit select. This will change up there. Screen from bases forming. You can see there are 1,239 stocks. And, this is where you can, test it or manipulate it to your heart's content. I only want composite ratings of 95 or better. Okay, so let's add 95 as a minimum. Hit enter on my keyboard. There are 95 stocks that are in the middle of the base with a composite of 95 or better. Maybe that's not enough. Maybe I want more, so I could change that or remove it. How about earnings? Last quarter. Let's go to earnings per share. Last reported quarter right here, number 18. Show me all the stocks that are in a base that have earnings up 40% or more last quarter. All right, let's put 40 in the minimum. There are 217. So you can see how you can manipulate this list to get in front of potential breakouts, which is something we've been hearing ever since I've been at MarketSmith for 10, 11 years. How do I find stocks before they break out? It's the magic elixir everybody's looking for. I think you'll find it's not such a magical elixir, but it's nice to be able to view the quality stocks that are in a base. So that you could screen it, or you could just grind through the whole list. I don't think I'm going to grind through all 1,200, but I might look at all the first stage bases, maybe the second stage bases, and then find a way to build it in to my my weekend routine. All right, the next list is called RS line new high. It's just going to be a cumulative list of stocks where the RS line is making a new high. And this list came out this weekend, so it's only 4 days old. So you've got Eli Lilly 4 times. So it's going to count all the times that the RS line made a new high. Not a blue dot, but the RS line made a new high. So if I go to Eli Lilly, let's go to the daily. You can see when it peaked above that, 1, 2, 3, 4 times it did that. There's no base. That's what the RS line blue dot is doing. It's looking for a base as well. But this is just going to show you all the stocks where the relative strength line is making new high. And it's going to count them for you. And again, I don't know how I'm going to use this list yet. I'll probably do a sort, comp rating, something like that, and start with the best ones and work from there. If the list gets really big, then I'll make that screening criteria. This list is going to be golden when we get into a bear market. I'm not saying that a bear market is today, tomorrow, next week, next year. I just know there will be another bear market unless we've just outlawed those. And the RS line new high is just the best indicator when you're in a bear market / correction. So those are 2 new lists that we've just introduced, and I would review those this weekend, try to figure out a way to build that into your routine. Okay. So my quote of the week, and I had 2. They were both very similar. I started with the first quote from Carl, like I know him, Carl Kawaja. He's a portfolio manager with Capital Group on a podcast. It was a very good interview. I liked listening to him. But then Jim Ropel was on IBD's podcast, came out yesterday, I believe, and I listened to that as well. I like Jim a lot. He said kind of the same thing about which stocks you're buying. So Carl says, I'll start with simplicity. I find I do better as an investor, and he's a portfolio manager, longer term time horizon, not trading. He's running big institutional money. I find I do better as an investor in businesses that I understand. To be honest, I've also invested in businesses that I don't understand. So that's me. I definitely do that. And I definitely feel like, at least lately in the last number of years, I've done a lot better in names that I can understand the business. I tend to hold them better. I tend to be positioned better. I'm not so easily shaken out. Sometimes that might hurt me because I might hold on a little bit longer, and the stock, it might take a little bit more weakness than I normally would need to see to get out of it. But if I'm trying to capture a big winner, you really need to understand the business. And it's okay to buy XYZ Pharmaceuticals or XYZ Semiconductor, big earnings and sales, breaking out of a cup with handle, sponsorship, and you don't really understand the business. I do that as well. I just might trade those. I might look for 20, 25% as my ultimate target if I were to get that type of move. So, but I think most people will find you can do better in stocks if you understand the business. So PayPal, Google, NVIDIA, Tesla, Shopify, CrowdStrike. I'm no expert in cybersecurity, but I can understand why we need that. Just in my day-to-day life, just logging on in my computer and stuff, we have a lot of checks and balances, to do so. So I think you'll do better in those type of names. Ropel says the same thing. In general, the names I've killed it in, I knew what was going on. If you don't understand the story, you are going to be the one causing the shakeout. So if you're just basing your decision on price, a lot of times the price doesn't look good. Jason Thompson, a portfolio manager, William O'Neill, said it on IBD Live, or maybe he was on the podcast he was on. He said, sometimes the chart's not going to look good. And so I want to understand the story. So if I'm going to try to ride through that period where the chart doesn't look good, it's not always going to look good, unfortunately. So there'll be periods where you have to decide, am I going to try to hold on to this name for a bigger win, or take it off or take some off and trade it, so to speak. So the podcast with Jim dropped. Did podcast drop? Is that what they do? I think so. It dropped yesterday. Irusha is back on the podcast. Him and Justin are like a duo. And so I think that's the second one he's done about being back on the podcast. So I think most people like the IBD podcast. I like the guests are spot on, and Jim is one of the best. All right. Okay. Here's the contact information. Reach us at marcusmith.com, 800-831-2525. Have a great weekend, and we'll see you guys next week. Thanks a lot.